Welcome to the CryptoSphere podcast, where we investigate some of the most influential founders shaping the Web3 ecosystem. From decentralized finance projects to new NFT mints, we cover it all. Here are your hosts, Ryan McNutt and Christopher Reese.
Still loading? Is it doing its thing?
It says it's recording.
Okay.
It says it's recording.
All right. Cool. There it goes. Now mine finally says it. All right. Hi. Welcome to CryptoSphere, the podcast where you get to choose what we invest in. I'm Ryan.
I'm Chris.
And
I'm
today
Kevin.
we have Kevin. Yeah.
Tell us a little
Kevin.
bit about yourself, Kevin.
Yeah.
I'm sorry?
Oh, tell us a little about yourself.
Sure, yeah. My name's Kevin. I am a token designer in the crypto space. Think about mechanism design. I write a little bit of Solidity, and then I'm just involved in a few different DAOs.
Very cool.
Yeah.
Very cool. So how did you get into crypto stuff to begin with? How long have you been doing this? A couple years, right?
Yeah, I think I got into crypto like really deep in 2017. I actually first heard about crypto like Ethereum way back in 2015, and I didn't really know what it was. So I looked it up. Like one of my friends was saying, "Oh, you should buy Ethereum." So like I looked it up online. I saw like smart contracts, and it was so intellectually like intimidating for me that I was just like, it's whatever, and I put it off. And then 2 years later, probably 2.5 years later, I was at my job, and I saw some news. I think on like Yahoo Finance that was like, Ethereum is $200 something, and it's been like on a run. This is May or June of 2017, and I remember thinking like, wait, I remember it was like a couple cents when I saw it. What the hell's going on? So I started looking into it, and that was the first time that like I actually really start to read and learn about blockchain and cryptocurrencies, and then as a software engineer, and this is something that you've probably experienced. You always have these like ideas to make passive income schemes, right? Like, well, I could like code a thing or that little thing, charge some like subscription, and so I was like, well, maybe I could write like a trading bot, that would like arb the different crypto exchanges.
Yeah, exactly.
Yeah, so I did that. I don't know if you've done that. A lot of people have like thought about the arb angle, and so yeah, that was like I sat down, I started building this bot. I started thinking about like which coins I wanted to be trading in. So I started like reading their white papers, learning a little bit more about what they do, and yeah, like one thing led to another, and then you just when the rabbit hole opens for crypto, I feel like it's kind of like a black hole, and you just keep going, and I'm still going. So yeah.
Very cool, man. Very cool.
Yeah.
And what were you doing before this? You were also a software engineer, right?
Yeah, I was just software engineer, tech startup, the usual, I guess.
Very nice.
Yeah.
Very cool, man. Very cool. And I mean, I know like for the crypto bots and stuff like that, like I built a deep reinforcement learning bot, and I was trying to do like where I would trade Bitcoin and things like that. Yeah. And I saw a thing a while back, like some dude made a shit ton of money by trading on like arbitrage between like the different exchanges for like crypto. Yeah. And I guess it was really bad a few years back versus now. And because now there's like all these like different arbitrage bots like coming out, I've seen. And there's something that like was here in Austin. We went to like this event last week, And there's some startup here in Austin that's doing like trading bots. I think it's called like Pioneer X or something like that. It seemed cool. It seemed cool, but I like the arbitrage ones. And I like the AI bots. They were doing. Have you ever heard of like grid bots before?
Mm-mm.
So like grid bots, what they do is they'll look at like the price, right, and they'll put it off like actually into like a grid, and then based off of the price and how it goes up or down, it's a
Yeah.
buy or sell like trigger. So
Interesting.
if it's floating
Oh,
between the two things,
yeah.
yeah, exactly. So, but I mean, it's like, I don't know. They have several bots, so I guess this won't be like kind of crapping on the company too bad, but like that's a pretty dumb bot, right? It's like if you just have like lines go across and it's just like, okay, it goes up, buy or whatever, like maybe sell if it goes up here, if you bought down here, something kind of like that. But yeah, they were talking about that, but like I think I like AI a lot,
Yeah.
so I think that's the way to do it. Or arbitrage is cool.
I like ARB because I feel like it's the cleanest. Like it's guaranteed if you can get the trade. And I think the hardest part in ARB is always like being able to get the trade on both sides. And definitely like in the past, I remember when I first started ARBing, there were so many opportunities that a lot of the times you can like manually ARB. I actually think that even now, like when markets go really crazy, there's a huge buy up or a huge like sell. I guess it's like sell more recently. You can still like manually ARB just because there's so much volume that's moved around like on chain, off chain, in exchanges.
Right.
When people get liquidated and the markets like need to be cleared out, I feel like there's still opportunities, but they're rarer and they move faster. So when I first started, and this is like, it's kind of funny, it's embarrassing, but it's funny. The first coin I bought ever was Ripple.
Nice.
Read the Ripple white paper and I was like so bought into like the Ripple vision, and I was like, yes, this is it. In Ripple, they had their own like order books. I think it was called GateHub. And like that was like the Ripple wallet, and then they were like decentralized order books, I believe, on Ripple, and you could trade like
that's pretty
crypto.
cool.
And so yeah, there were like crazy like 20-30% ARBs, like margin ARBs. It was like absolutely insane. But the volume was like super low. It's just like no one was there. I bet a lot of orders were like test orders that got stale or something. I don't know, but I remember like one day I was like, they had like a Romanian bank or something, and I was like wiring money to this like bank to get this. I was like, huh. So there are, the thing about ARB is like there are opportunities, and then the two ways to compete are like, one, you either just have to be the fastest arbor, which I think is harder because you need I think that needs more infrastructural investment. You need a good team of like engineers. You need you probably have to pay for the hosting or co-location or some kind of like special privilege access to really win at like the high volume stuff. Your tech's got to be really good, and the milliseconds will count. But then the other way to ARB is like ARBing, I think, in more creative paths where if you don't have a lot of money, like my problem was I didn't have a lot of money. So if you do like a 1%, like you're just trying to get a small clip going from Gemini to, GDAX, you can have, if you have like 50 grand or 100 grand and you're getting like a percentage or, half a percentage on that, that's nothing. And then to move the money back and forth across the exchanges is like, you gotta pay your ACH fees and then you gotta wait like 3 to 5 business days. And so unless you have a lot of money, a lot of backing, a lot of infrastructural investment, I think doing ARB on stuff like US dollars and ETH and BTC is really hard to be successful. But you could ARB like shit coins that no one's really market making at all. You could do like I know a guy I was talking to earlier last year, and he just like learned Solidity and then he built on-chain ARB bots, which are like better, I think.
Sick.
What is that noise? Hold on. Oh, sorry. 1 second.
No worries.
Oh shit! Forgot I left something on.
Is it food?
About that. No, it's good. We're good. We're good. I want to make sure I'm not like burning down my apartment.
Right.
Yeah. Okay. So this
But
guy was
on-chain
building
bots?
on-chain R bots, and he just basically looks. It's a smart contract that queries. It's kind of like, do you know what one inch is, or like an aggregator?
I've heard of it. I've heard of 1inch.
Uh-huh.
I haven't really looked into it though.
So they basically operate a DEX where they look at all the different other DEXs like Uniswap and SushiSwap, and they see like what the best price is, and then they, especially if you have a large order on these like on-chain DEXs, you get slippage because the AMMs aren't that capital efficient. So maybe it's better to actually break up a large order into two different orders at two different swaps that have like liquidity
Cool.
to absorb some of it, and so you can build these like on-chain bots that query different DEXs. And the really cool thing about this is you can guarantee a profit where like you execute the transaction only if you can buy at one DEX and sell at the other DEX. Otherwise, your transaction reverts, right? What you can't do in traditional ARB, like when I was building trading for crypto exchanges, you have to deal with a different type of slippage where like, okay, I see that, the books, there's opportunity. I could buy for, higher than I could sell at. Well, if I end up like filling the buy order at an exchange, but then someone beats me to the sell order, then now I hold on to a position and I have to deal with that and the risk of that. So it's like, like on chain, you're just like, okay, I'm only going to clear this transaction, only mine it if I make a profit. If I don't make a profit, trades, aren't actually profitable, then just don't mind this.
That's
which is
pretty
cool. Yeah.
Very cool.
Yeah.
And you have a friend that did that?
Is it like kind of like a friend, like, someone I knew from the industry who's coding, who's like working on projects, and he's just running this on the side, and we would have like calls like these kinds of tweets, and I just hear like ding, and I think he's like checking his like, oh cool, like an ARB just went through. Yeah,
that's awesome.
But it's I think on chain still, like there, you'll have different issues, right? Like you have gas wars. So like if it's a very prominent swap, it's like Uniswap, SushiSwap, there's a lot of people watching those pools, and now then you go into like MEV and who can get it first. So there's a different like challenges, but I could talk about arbitrage all day, and that's so interesting.
That's pretty cool, man. That's pretty cool. Chris, do you have any?
No, I was just gonna talk about some of the ask a little bit more about kind of the challenges between on-chain and off-chain for different ARB trades, and for those of us that may not be as in it as you are, explain that a little bit more.
Sure. Like in terms of like how it's
is it mostly speed related, or?
Oh, I think they're both. It's speed relative to the source of truth. So in an exchange, the source of truth is the exchange, right? So you can just like hit their API, and if you're cleared, you're good. With the chain, it's a little bit harder. There's a lot more factors to consider. And then, like one is, I think long term, you're going to need to have partners with block producers or something like Flashbots, where you just have premium access to like the block space. Otherwise, someone's going to be able to do your ARB. Like there was a whole thing, I think, a couple years ago when talking about like keeper bots and in Maker, where like the miners eventually, if they see that you're a profitable bot, they'll just look at what your transaction is. In theory, I think, and they can just create their own transaction that like is ahead of yours. And publish it because they have miners have the ability to like order transactions in the blocks. So if they see your transaction and it's included in the block and they're mining it, they could just mine a transaction where they put theirs ahead of yours. I think that's kind of the principle behind Flashbots, is like you're democratizing this. So now there's like block space, and anyone can actually come to them and try to get like a premium slot, in the blocks. I'm not entirely sure, but that's my intuition. So yeah,
that's cool.
I don't know. Yeah, but it's at the end of the day, it just comes down to speed and like how you get the speed, Yeah. Look, if you're trying to get into like ARB opportunities, or if you're looking at ARB opportunities, I think the best ARB opportunities right now are probably in some like the derivatives, and like, because you see, and everyone's kind of like going into perps, right? A lot of trading activities moving into perps. I think there's a lot of like spot versus like futures ARB, where you can like hold spot. There's like funding plays that you can do that are probably better than the traditional stuff. And then also I think in general, like in crypto markets, we see so much leverage and like retail traders that trade with leverage. And you get these like huge downswings, right? Where like a lot of people get liquidated at the same time.
Right.
And when people get liquidated, the markets are basically like overcorrecting because, there's so much like excess, like, supply that, is coming from people that held positions, for trading purposes. And I think in those cases, like there's like, you could probably manually ARB some things. I remember I saw a Twitter thread with the FTX guys, Alameda Research, and they were saying like between Huobi and Binance, don't quote me on this, but it's something like two major exchanges, it's a 10% difference in the price. And you're dude, yeah, like that's a lot. Like,
that's a lot.
2020, I think 2020. And so it's like, I don't think it's getting better because the volume is still like really high in those times. So yeah, if you want to get into ARB, like I think there's still opportunities. The thing about ARB is like, it's the myth of the passive income. Once you find a winning strategy, you don't get to like sit on it and farm it because someone else is going to find it, and then you're going to have to split the rewards or compete for it. So I think like ARB is really like, you just keep looking at like the next thing and try to like get there. It's like drop shipping, right? You think it's like this one-time thing, you hit it and you're good, but it's the product is like, it doesn't get hot anymore. So you got to switch to
you have to rotate.
You got to keep it going. So it's the same. Yeah.
So what do you think?
Go for it, Ryan.
No, go for it, Chris.
I was going to ask, with the recent crashes, how much do you think of that was a lot of people getting liquidated on over leveraged positions versus just like macroeconomic factors like Fed decisions and stuff coming into play?
Okay.
Or was it kind of just like a combination of both?
Yeah. I'm going to say like, I'm not the best person to ask for market related movements, just because like there are people I know who will be able to tell you by looking at like exchange volumes and certain types of like price activity, what's actually happening behind the scenes. I'm just going to, say some kind of like speculative shit, but there's no real in like in analysis for me. I will say though, I think there's a trend where it's not one or the other, but that they're related to each other. There are macro things that do happen that I think cause, price movements in crypto, like fair price movements in crypto. Maybe the interest rates do affect it, right? Like generally speaking, I think that's a pretty safe statement. And then, because of the way that the crypto markets are architected, and a lot of the times certain markets are very thin, and then those thin markets that have way too much exposure might, have like impact on other markets, and everyone's kind of like arbing. And yeah, I think in general, like it feels like crypto is very over leveraged. A lot of people I know in DeFi are, like leveraged in some way just by being in like a farm. If you're borrowing and you're farming on borrowed funds, you're still like, you're leveraged. So I think in general, crypto is quite exposed. So like it'll react in a more amplified manner to like a traditional like market adjustment, just based on how much capital is being utilized. I don't know. That's a very like novice statement. There's people out there more.
Do you think we are headed towards a like bear market, or like do you think we're
headed towards? I think we're in one, and people are kind of in denial.
Yeah.
Seriously, like it feels like 2018. Like there's so many like dead cat bounces where it looks like it's being revised, and deals are still happening. Money is still flowing, but it almost it feels like there's no energy left in the market, which I'm okay with. I think like it was a little bit more than a little bit. There's always a time in crypto where things get like overly euphoric, where like money becomes a meme, and you know,
Right.
memes are ridiculous. Like pictures of
Yeah.
things that are worth way too much money. It seems like, I don't know.
I mean, I think if the traditional Dow Jones and S&P are like any indication of how high tech, high growth stocks are trading, having lost like 50 to 80% of their value, like it'd be interesting to see parallels between like traditional market and like crypto market, right?
Yeah,
Because
I would.
they're kind of in the same place.
Yeah, I think in crypto, like, you know, if you're in crypto purely for the markets, like you're gonna have a bad time.
Yeah, you probably won't have some fun for a little bit. Yeah.
Yeah. But like, you know, for me at least, like I think the best way to like hedge your crypto investment activity is with your like crypto like work activity. Like if you actually like get involved in crypto, the bear market doesn't actually feel that bad, and in some ways is like the best opportunity to find like people with the right mindset, you know, people who are actually interested in the technology. I know like 2018, 2019 is when, you know, the early like opportunities for like DeFi Summer, like Compound, Uniswap. These are the projects that were
Right.
coming out. And this is when everyone else was like, okay, shit's going, you know, everything's on fire. I'm out of here. And it's the people that stayed and they just kind of like hung around, and they found those like interesting projects that like 1000x portfolios 2 years down the line. So it's just like, it's, yeah, that's what I'm saying. Like if you're in it just because you're like watching bags, you know, you're like, oh, fuck, like Cardano's up or down or Solana's whatever, but you don't really know like beyond that what's happening, then like, yeah, you're gonna have bad time. And I also think that the markets are very unregulated, and there's a lot fewer players with a lot more power. This is something I only realized this cycle. And, you know, I've been like looking at the markets. I've been like, you know, somewhat involved. At least I have more, you know, sight into the industry than I would say like the average person. But even then, like I didn't realize until this cycle like how few players actually exist in the market that have like influence, you know, for what's happening in it. And so yeah, I think, you know, most people are at an informational disadvantage in the crypto. I guess it's the same, to be honest, in any market, but yeah.
Versus like
No,
traditional,
I think you keyed on an important thing about longevity in the market, seeing pretty good returns, because it's like pretty easy to kind of you know, start up some DAO and, you know, or NFT project and rug when like the market's pumping and like make a bunch of money and not really provide any value.
Right.
Right. So I think that was kind of a cool thing that you keyed on, was like people in the bear market that focused on value creation projects saw, you know, pretty good return on investment there.
Right. But it didn't come until like many years later, you know? And so like, how do you actually have the patience? A lot of people talk about like, oh, you need patience, but like, how do you actually have it? It's like, you can either be, you know, like a monk, I guess, and just, you know, just have it, or you could just like, you know, just really enjoy being here, whether or not the markets are taking off, and then eventually things will come around.
Yeah.
The nice thing about crypto is there's something for everyone, you know, like you're a sports fan, there's like probably like really cool decentralized sports betting applications out there, and you could probably make, you know, being like an oracle, like just watch your favorite like sports, you know, games, and then like report on them and like make crypto money like that, just like 10x like 2 years later because the token took off. Or I mean, you know, it doesn't matter like what you're into. There's something for everyone in crypto. If you're an artist, if you're a musician, you know, maybe like list some songs on oh no, what's it called? Catalog, right? It's like catalog works. You turn it into an NFT. There's like so many things to do in crypto.
Right.
Like, yeah, you know, market, whatever happens, like.
Do you think that accessibility though is kind of an issue right now, and maybe that'll be something that'll be like fine-tuned in the next couple of years? Because I find like, I mean, what we were doing, me and Chris were doing, is we were going to like local artists and we were trying to tell them or help them turn their artwork into like NFTs. we ultimately like ended up like pivoting away from that because not a whole lot of artists signed up, and we only talked to like a handful. But you know, it seemed like it was a recurring issue where like it was too complicated for them to, you know, do that. And like, I mean, I know like when I'm talking to my parents about this stuff too, right? It's like, oh, hey, you know, there's this thing called MetaMask, and like, you know, you use this wallet, and they're just kind of like, what the heck is that? You know, it's just like all this stuff kind of blows people's minds. So do you think like people work on accessibility and like making things easier to use in the future?
Yeah, I think that comes with it. I actually think accessibility comes when there's more, like accessibility will be there. I think when there's a demand for accessibility, and there isn't actually as much of a demand, probably because the opportunities still aren't as yeah, there was a lot of money this cycle, but as a mature like market where there's like genuine transactions happening on a consistent basis, like crypto is not there. I think that if crypto was there, like these artists, you say like too complicated, but complicated,
Right.
too complicated for what, right? Like maybe it's too complicated to try out a project right now, but if there's a lot of money behind it, it's not going to be too complicated for them. That's how I feel, at least, right? Like, hey, if there's a $5,000 airdrop that you're trying to claim, okay, but just all this, is it too complicated to claim the airdrop? No,
Right.
If it's $5, you're like, all right, it's too so I think we're just not at the stage yet where this infrastructure is mature, where there's like actual reliable transaction-based income for artists to really like see this as a real bet. They might see it more as like okay, like I'll try it out, but if you're trying it out and shit's really hard and you don't know if you're going to make it, then it might be too complicated. I think it just takes time, right? Like it's just it's a cultural thing, which means that like over time we need a percentage of the population to kind of like grow into the mindset that crypto and these crypto marketplaces are where I transact and participate in the economy. You know, if you continue to open OpenSea.com in the next like 6 months, then you are in some ways, you know, affecting the like cultural mindset that this is now another form of like a market that we as a generation participate in, and, you know, as a part of the economy. And then artists might be more like, okay, you know, there's a consistent amount of revenue that's happening here, good market or bad market. Maybe I will be an OpenSea artist, you know, maybe there will be a generation of OpenSea artists, like how we have SoundCloud rappers. Like that'd be kind of sick.
That'd be really cool.
Yeah.
That'd
Except
be really
cool. Hopefully something that's more decentralized, but whatever, you know.
Yeah. I mean, there's some guy I saw on 60 Minutes, I think it was. He's doing like the Smiles project. I think he
Littles.
like is a.
I'm
Say
sure.
what?
I think the Littles.
No. I think it's called the Smiles or something. I'm on their Discord, but like the guy, yeah, all smiles. The guy who's heading it up, like he's going to donate some of the money, like the proceeds, back to like Afghan like refugees and stuff, because he's like an Afghan refugee.
Oh, dope.
Yeah. I mean, and the art was pretty good too. I think Supreme did like a shirt or something with his art on it, and like, I mean, it's just kind of cool. But I think his stuff was on OpenSea or something like that. But yeah, I mean, the guy was on 60 Minutes, you know, like mainstream TV. I was like, this is cool.
This is dope. Yeah, this is a cool project.
Yeah. I mean, like I think the art looks pretty good too in general. But like, yeah, I really like some of those type of projects. What do you think about, like, have you heard of the Facebook news where they're going to start doing like NFTs for everybody on Facebook and Instagram?
Really?
Yeah. So supposedly, like supposedly what they're going to be doing is they're going to enable everyone to do like NFT content on Facebook. And I think then at that point, everyone will have a wallet. So it's like, are we about to have potentially a billion people have like a wallet if they didn't already have one?
That'd be insane.
That'd be freaking cool. I don't know.
My address to Facebook. Whatever.
Right? I mean, we also saw like there's this other project. Have you heard of DeSo? It's like decentralized social. It's like they essentially made a Twitter that's more like Web3, And on that, they actually have like a cool like login ability where you can log in with Google. It's kind of like, it's not 100% though, because I think you could sign in with Google, and what they do is they just stick a text file in your Drive account or your Drive on that account, and the text file is like your seed phrase. And so like not super secure, but like, you know, it does enable somebody to like hop on and instantly like, you know, have an account, having a wallet, and really like get in there.
Yeah. All right. So this actually looks like a cool project. There is a gripe. There is a gripe I have with it. And this is a gripe that I had with like late stage like ICO projects too. Okay. So I'm on the landing page, and like the call to action button that they have on the top right isn't like use our app. It's like buy our token. And it's like this whole you know web page is like designed for like the sale of the token versus like you know the actual like application.
That's hilarious.
That's a fair point.
Which is okay, but like I remember like in 2018 or 2017, like you know near the end, like you go to these projects and you're like, okay, you know the website, and then the first thing in the middle is like read our white paper, or like here's our like roadmap. And it's like the user, if you think about like the design of the like the website, who it's for, the audience is for like investors. It's not actually for, you know, the user. Like if you're a user, you don't want to see like, okay, like this is what you're buying. You want to see like this is the features of the platform, how you use it. This kind of stuff.
Yeah. Oh, I think I messed up. It's actually check out Diamond app.
Diamond.
Oh yeah, Diamond's the social media one. They have like bounties on big influencers that have yet to participate.
Dude, okay, this is sick. This is actually sick.
So if Elon Musk goes and joins Diamond, he'll get some odd amount of Ethereum.
Like I think it's like 14K in Diamond, or I mean in DSO. And people like give you, I don't know. I had a buddy here in Austin who's doing like a entrepreneur like social media platform that's for like businesses and stuff. And DSO has that. I think it's on their website. They had that Octane fund, and he just got money from the fund. And so they're going to be transitioning their website and app to then also support like DSO, and he's on Diamond. I think he should be on there.
Are you guys on it?
No. Are you on it, Chris?
Yeah, I'm on it.
Damn.
I didn't get the kind of bounty that Elon got, but I think I got less than $1.
You got less than
Wait, did Elon claim his bounty? Is it worth it for him? Did Elon claim his bounty?
No.
Oh no.
I feel like a lot of the people that they have bounties on haven't really taken up on that opportunity yet.
It's like big.
So I never see the list change.
Yeah. I mean, if Elon Musk joined it,
come get 15 grand of free money, and he's like, I've got I've got billions of dollars. I have no need to go get that.
Yeah.
I mean, it's definitely interesting because like my buddy Michael, so he's like Michael Mara on this like Diamond app, and he's got like 430 followers, 300. He's following 300 people, and he's got like tips and stuff. And he has I guess they have like you create your own like creator coin or something.
Okay.
And you give people diamonds. Like I don't really understand everything, but yeah, I mean this platform's wild.
Have you guys heard of BitClout?
Yeah, I've heard of BitClout.
I just went to BitClout, and BitClout is now selling DSO as well. So did they like pivot or something?
Really?
Yeah, it says BitClout, and then they have a
thing I see that.
Yeah.
Huh.
So I actually think that I feel like BitClout maybe like they're working with DSO, so these accounts on BitClout on Diamond are the same accounts on BitClout. It's part of the same network.
Interesting.
Interesting.
That's dope. Yeah, it's interesting.
Well, it looks like it's a kind of a different take than the Facebook model where it's free to use, but they're still able to generate revenue through like tips or currency that's transacted within the social media platform
Yeah.
instead of like inundating people with ads or abusing their privacy. So
Right.
kind of an interesting take, right?
Totally. Yeah. I feel like that's a lot of Web3. It's more just about the end user, like us owning the value that we create on the internet.
Yeah, I feel like there's a big push against Facebook for trying to kind of get into the metaverse and trying to centralize everything under, their authority and stuff like that. It's kind of like open source community versus big tech in a lot of ways.
Yeah, dude. Someone behind DSO, they're making moves for sure.
Yeah.
Yeah.
I mean, I think it's on Diamond. Like if you go to login there, that's where they have the Google thing. I mean, that's pretty cool. Because we want to have something like that on our app eventually. Like, because just like that's super frictionless. Like, you hit a button and then bam, you're in. Versus like, man, I don't have a wallet, and like, what do I do now?
Yeah.
So, Kevin, have you ever played like any like crypto games?
No.
Things like that.
No, I missed that whole wave. The whole like GameFi. I like tried. I tried to get into some like NFT gaming projects and things, but it doesn't feel like it's my niche. It was very hard to like figure out how to break in and which projects were legit. Yeah. I kind of sat it out.
Yeah, I mean, there's so many weird ones. Like, I heard about one about chickens. Like, you get like a random egg, the egg hatches, and then you try and feed the chicken. Yeah.
Dude.
Yeah, it's weird.
Yeah.
There's also a horse one where you like train a horse and the horse runs races for you, and if it wins, then you like win a bunch of money, I guess.
Zedrun, right? Yeah. There, the thing about games, I feel like there's like so many iterations. You had like a wolf game or sheep game, wolf game, and like a crab game, and everyone's just like forking games. And at the end of the day, I feel like it's all just the same like DeFi Ponzi stuff, but just like with a UI, just a better UI.
Yeah, I mean, I do you hope like did you see Activision got bought by Microsoft?
Oh no,
the other day. Yeah, dude, $69 billion.
Oh my god!
It seemed like a good deal considering Slack got bought up for like $40 billion.
Wow,
I think
really?
Blizzard, So
they got all of Activision and Blizzard for 69.
Yeah, now you have all you have the antitrust people with the pitchforks and stuff, right?
Right.
So we'll see if that goes through.
But supposedly, like, that's part of Microsoft's play to get into like the metaverse. Because I guess like Blizzard, Activision had already like spent some time and resources in that, like trying to make like a game. So supposedly that's kind of like their move, from what I understand, to actually like start hopping over towards that. I was like, damn, okay.
Well, maybe would you buy like Microsoft NFTs?
No.
No.
Making my profile picture.
Yeah. It's something like at some point, when all these big brands started posting GM on Twitter, it started to feel a little like weird.
Yeah.
I don't know if you guys remember that, but it was like, it got to a point where like all this like crypto like culture permeated, and then these like big brands were like posting this stuff, and I was like, whoa.
Oh, dude, I found because we were talking, the other day. I found a project because we were looking at different forks and stuff. There's some project that is literally called Ruggable or something.
It's a rug DAO.
And like, it's a rug DAO, and the name totally not endorsing
the token's named Rug.
Yeah, the token's name is Rug. Let me see if I can't find it. It's like their Discord was named, I think, Rug Shack. Like, it was just terrible. I was like, oh my gosh. Let me see.
It's ironic because they've grown a lot.
Oh, rug/scam shack. So
Wow,
yeah, man,
dude, it's
they're
probably
really
a
going
legit
out there.
project.
It probably is.
They probably
So,
have like protocol engineers.
Oh my
Kevin,
goodness.
as like somebody that saw a lot of legitimate DeFi companies kind of climb out of this bear market, was there a sweet spot where you saw people start kind of offering their coins out to the public? Like, did they do that pretty early on, or did they kind of hold on and wait till they had a bunch of users and had a product out? Or what were some of the trends you saw there, or like maybe today with like some legitimate projects that eventually want to raise?
Yeah,
Chaos.
I think the tokens they were very like supplementary. Like I'm thinking like Uniswap, right? They did a retroactive airdrop like years after they launched, and I think it's less about the timing actually. I think it's more about like the palatability of the mechanism for distribution, because that's actually, I feel like it's kind of like Christmas. It's like a huge event and everyone likes to talk about it. People like to post how much they got on their airdrops in Twitter, and it's like its own marketing thing. If you want to take it in that direction, I'm using this lens, like EMS, right? People will talk about, some reference to getting the airdrop or some kind. Then in farming as well, people like make reference posts on Twitter about them farming this or farming that, some kind of like APY percentage that they're getting. I think what's really important probably is novelty of some kind, and then like the derivative of like fork that you are to like that novelty is directly impacts how long your project has to live. Like the OG innovations, for anything will probably be around for a long time, even if they don't do anything. Kind of sad, like, the larger like lending, like a compounder. I don't know.
Right.
Maybe I'm just like, trash talking, but I feel like a lot of projects they just kind of like do their one thing, and once they make it, they sit there. But then you have the derivatives, the forks that copy the code, copy the interface, put some twist on it. Maybe it's novel, but then they last an even shorter period of time. So to me, I think what's really important, if you want to do a token distribution, if you want to do something that's genuinely like novel and innovative, I feel like it's not that hard, because like crypto, it's so nascent. There's just so many things to do. Just sit down for a bit and think about like, okay, what's some way that I can push the envelope. And if you do it in the right way and people talk about it, then yeah, I think you would create like a long-lasting token that is kind of like for no other purpose, at least like a cultural artifact of kind of like the maturing of crypto, right? Like people talk about Mt. Gox, and almost like a participation, kind of like it's a bit of a flex, right? It's the same way that you like flex that you might go surf or like yoga at 2 p.m. or something. It's like I was there, like I probably I've been in crypto for a while, kind of a thing. I don't know. I'm just rambling. But yeah,
I mean, we're definitely trying to figure out stuff for us and like what to do for like our next steps. Because we're trying to do like an NFT pretty soon. We're gonna like have like this black card, because we're gonna do like credit cards and stuff like later down the road. So like we met with this guy Sean, who's like this marketing dude, and he was like, oh hey, like you should do like selling your vision today, or your vision tomorrow, sell it today through like your NFT instead of just doing like something random. It's like, okay, cool. So now like Chris did some artwork for like a credit card, so we're looking at doing that, and then like a token.
Have you heard of Pool Sweep?
Pool Sweep?
Pool Sweep.
Yeah, I've heard of Pool Sweep.
Chris, you should check them out.
Yeah.
I won't say too much, but I think it's a pretty cool rabbit hole. I feel like it's a similar idea, right? They have like a membership NFT that gives you certain rights, and rumor on the street is that like holding one of these can give you some perks or benefits to like local shops maybe in New York City. I heard that from someone who heard that from someone. So
I think I've heard that. I think I've heard
Yeah.
that too. From someone here in Austin. Yeah.
So, you know, that could be cool, right? Like some kind of like
Yeah.
NFT community perks. And then your whole job as like a member of the community is to find more perks for the community and get more people
Yeah.
involved and grow the distribution. I see that as a very viable way to like do commercial business in the future.
Yeah, this is it's very similar to the full send card that they put out. Did you follow that at all?
Mm-mm.
Essentially, there's a big YouTube group called the Nelk Boys, and I think they have like 10 million followers on YouTube. Just like crazy. Whenever they do merch, their website, you know,
Yeah.
crashes and stuff. And they kind of said like, you know, within 2 or 3 days that they're just gonna like do this NFT and ship it. And they kind of shipped this full send card. It was the same across the board. They released, I think, 10,000, and they raised like $25 million, and it sold out in 10 minutes.
Wow.
So, you know, that kind of like membership utility model, it represented as a card, I feel like is taking hold a lot more.
I just had this thought. Which is that like I think eventually these things are all going to converge into credit cards. And you guys are probably like ahead of the curve here because that's what credit cards are, right? Like you get the black, you know,
membership,
perks, right?
That's what we're trying to make.
You get the airport lounges.
Exactly. Yeah.
Yeah, and so, you know, it's the same, and you're starting with the perks. I think eventually, if you have enough people with the perks, like, you know, you can offer a credit card service, or you could start as a credit card service and then build perks in. But anything that has this, I feel like, you're just a service provider to this community. It's cool. Yeah. I think you guys are onto something.
Sweet.
Yeah,
I
now
like it.
we just need to figure out the decentralized identifiers and
all that
other.
We don't even have to worry about it. Right? Let's just assume that it's done.
Yeah.
Yeah.
Shoot.
Oh man.
Yeah.
Fun journey.
Yeah, I mean, we're right now we're working on a fork. We're getting some stuff ready for our demo tomorrow with Techstars.
Dope.
So it's going pretty good.
Right? Or Sphere DAO.
Yeah, Sphere DAO. Yeah. So we looked at several projects. We forked Wonderland.
Nice.
Have you ever built anything on Avalanche?
I have not, but I'm looking at it actually. I was just looking to deploy some contracts, and I'm deciding between Avalanche and Arbitrum, and I'm leaning towards Avalanche right now. Okay,
because we're definitely looking at Avalanche, and I mean that's kind of where we've decided to go. We're trying to figure out, or I'm trying to figure out, some of their dev tools. Interesting. Some of the stuff they've set up for like local, like testnet type stuff. They have two tools. One is deprecated, so they aren't doing that tool anymore. But then all their docs are still with using this old tool. And so I'm like, what the heck? So it's called like Avash is one, and they have Avalanche Test Network is the new tool. Avash is the one that's deprecated, and the Test Network is the one that's, you know, supposed to be used. But like all of their documentation is all still with using Avash.
Yeah.
So I'm like, how are you supposed to transition?
Dude.
You know?
Yeah. Here's a trick that I learned from another dev in the space. He just used Phantom and Matic as testnets, and I love the idea. Like I just deploy shit on Matic as a testnet, and the thing is, like, one, it's cheap enough.
Yeah.
Okay, first of all, like it's cheap enough. A contract deployment is like a few cents, whatever. I like that. What I like about this is like testnets generally, they have a really bad like node hosting infrastructure. A lot of the times, like the blocks, they get deployed or produced in very like irregular like frequencies. There's no real incentive, right, to keep it up. There's a whole faucet. There's like no, but like in Matic and other things, you have like an actual live production environment, and so you can go to the block, the scanner, like Polygon scan. You can interact directly with your contracts live on a chain. You can use real like USDC or DAI if you have money, features, and you just like put in a few cents. So it's like, it feels more like legitimate. The infrastructure uptime is better, and generally, because you're using like actual RPC services for real projects.
Right.
And then when you're ready, you just change the RPC that you deploy to Avalanche, and everything should be the same, right? Because it's all EVM.
Right. That's actually a pretty cool idea. I mean, I know like when I was doing development stuff for like, if I use Firebase, like I would have sometimes like a test like backend, and I would just make a project, have it in the free tier, and I would just set everything up and then just switch the credentials when I would actually deploy to like prod.
Dude, yeah.
And it's like same kind of thing, right? But like just a couple cents. I mean, that's pretty cool.
But your environment is different actually, because your environment is a prod environment. Like your block producers will have uptime requirements to enforce the liveness of the network. Right, like in Ropsten and Koban, like you don't really have. I don't actually know, but I imagine you don't really have an incentive, and I'm not really sure how the blocks are produced and propagated. So I always found that when I was like testing, at least on Ropsten, I've never used the Avalanche testnet, but it's very slow. When you deploy the contract on the testnet and then you interact with it, your transaction times are long and they're unpredictable. And then if you want to chain a bunch of things together, like, dude, you're gonna be sitting at your computer like for an hour just trying to like link together 5 or 6 functions sometimes. And then you can, getting the ETH from the faucets and stuff, it's a huge hassle. So I kind of like the idea of like testing in prod, but in a different prod environment that's generally cheaper, and then you don't have to worry about it. Yeah, that's cool. It's cool too, seeing it like with real money, and it doesn't matter if it breaks or not. You're like, okay, that's it.
Well, I mean, when shit's so cheap, right? I mean, like, it's not that big of a deal.
Also, maybe you're actually helping the usage of the network, so there's like more revenue. There you go. So the price of the token. I don't know.
Oh, that's cool. Yeah. I mean, yeah, it's definitely like been kind of fun trying to set all this stuff up, and then we're definitely like, I think after this we're going to be spending some time like trying to like actually get our like pitch down and that kind of thing. Do you have any like recommendations or anything like that for investors or like people we should talk to or something like that? Like I mean, I think you mentioned something before, like Paradigm was one. Was that you I was talking to?
I don't know. I don't think so. I think Paradigm is a good firm, like a good fund.
Okay.
I think there are a couple like really good funds. Nascent is another one, but in general, I would say like if you're preparing for a project or something, I think investors shouldn't really be like the primary focus. I would actually wait until you build a community first, and then based on like the composition of your community, I think it'll be better to find investors, because like I think certain investors like you want them to be just like community members that happen to be whales. And I think if you find investors first, right, like you'll end up like, you might have some kind of clash, or there might be like some difference in interests between people who are actually like proactive in your community versus people who own a lot of the tokens. That can cause a lot of problems down the road. And you want to make sure, at least, as a token, someone who thinks about tokens a lot, you just want to make sure that the composition of the distribution of your tokens works in a way, if you're going down this path, that facilitates peaceful governance.
Yeah,
let's put it that way.
It's kind of interesting because
it's a good way to put it.
In this decentralized model, when you go and get VC funding, you kind of give up any sort of the governance yields you'd have to make when you have a VC that comes in and takes a bunch of board seats, and when you kind of have to manage the board, obviously that presents some challenges in a traditional company. But when you kind of do these token raises and these DAOs and they buy into it, obviously they don't have any really control over, I guess they have some control over the governance with the governance tokens they own, but it wouldn't be as big as it would be in kind of like a centralized hierarchy.
Why
not? Because you don't have, you're not really appeasing them. Like, you're appeasing a larger community. The community as a whole is making decisions versus some VC that's sitting on your board, right?
I think if they have the same percentage on the cap table, it doesn't actually matter. Like 10% of a a cap table versus 10% of like a network, it's 10% of the governance power. I actually feel like it's the same. What makes it different is usually that like a larger percentage of the distribution is distributed to the community or to the users. Sometimes, not all.
Yeah. I
Right,
think
like
that
you only
that
have like a
assumes
reserve. Yeah.
Yeah, I think that assumes everything is linear with respect to voting power. I think we're seeing a lot of models moving towards quadratic voting.
I would be careful, man, because like it's easy. It's like it's easy to create these like mathematically, yeah. Quadratic would be great. How do you enforce identities? Are you going to be the KYC provider? If you're not, then how are you going to stop me from just splitting like my voting across wallets? I think GitLab had some issue with that, because they had the quadratic distribution, and people game it. And so if you're not ready to create some security systems, monitoring systems to make sure that no one's and governance too. It's not just for airdrop; it's for like actual voting power. Like if people are manipulating that, it's serious. I think you can, we have these systems, but it's really hard to execute correctly.
No, you bring up a good point with the wallet splitting problem, right?
Yeah,
you could artificially increase your value when it comes to governance.
Right. Yeah, and also, you have the issue with like bribing, right? Like if you don't know exactly who's behind the votes, then how do you know, that votes aren't being bribed in a certain way? Or maybe you allow that as part of your protocol. Like, that's also another option, is just you design things with the understanding like this will happen, which is why I think like a quadratic, people talk about it a lot, but two things. One, doing exponentiation in Solidity is like really gas expensive. Because the EVM only like does add, subtract, multiply, divide. I think like natively something to do with, I'm not sure exactly, but I know if you're like adding and multiplying, it's quite trivial. And then we have to build our own like helper functions for square roots and squares. And so if you have certain like curves, if you're not doing just like a straight up like x squared quadratic, but you have some extra like features or like different like coefficients or things, that it might get kind of expensive.
Yeah. Well, I guess maybe where I was trying to get to get your input on is, do you think taking early investors is even more problematic? Because I think with traditional private companies, they obviously couldn't seek an exit until you were acquired or went public, and kind of in this DAO model, people can see 5x yields in a matter of a month, liquidate, and just kind of kill all momentum behind a project, right?
Okay, I think it's like this. What crypto does, and going back to like the original, I guess like vision, is it disintermediates the middleman, right? Because it allows each user, as long as they have some identity, just a public key, to interact directly with the source of truth, as long as they pay a fee to do so. And so it makes it very the creation of something much more simple, because there's no intermediary authority that has to process, an application, or so to build a community, to launch a project, to find investors, all of these things actually happen a lot faster. I think crypto, kind of like removes those. So yeah, you have direct distribution to a community from day one. You have like direct distribution to investors from day one. You just create a token and they can buy it. You create a product, people can use it. You create a Discord, people will join it. Now you have the key components. And I think also why it's so easy to fork things and make, things out of thin air so fast, because the attribution is so direct. So I don't know if you necessarily have a set strategy, or you have to go to an investor, or you go to the community, or you go to whatever, because it's all out for you. Like you'll have to do all of them regardless, right? You have to build a community, you have to find investors, you have to find capital. So I don't know if it matters necessarily what order you do them in, as much as it is about like making sure that those are aligned. And traditionally, I think people think about investors first, because capital was scarcer, and so I think that mentality is like left behind in our culture. But today, I think the opposite, that What's really scarce, you'll find, is not capital. Like there are a bunch of people out there who made a lot of money, who are looking to redeploy it and try to like flip up, who don't know what they're doing, who are willing to give you with, you know, no expectation now, right? But but there's not a lot of people out there who are like, you know, dedicated to a project. You know, attention span is like stays there, you know, for more than like 2 weeks. And so I think if you can build that, you have something that's so much scarcer, that gives you way more leverage as a project than someone that has a lot of capital. And what I see happening is a lot of people raise capital. They raise it more easily than they, you know, maybe had expected in the beginning because it's crypto and it's the current market conditions. And then they still don't have a product or users, but the expectations have grown dramatically because of the amount of capital they raised. So the sensible thing to do, right, is to go and acquire users. And the one thing that you have that in abundance is capital. So you start doing things like, you know, like these promos or whatever, but then it all just kind of becomes the same project. And so I think it's better if you know, kind of like find your soul, your identity, and then you're like, all right, let's do this. And then like whales are around, you know, like I think in crypto, if you're on the right track, money will find you. That's my belief. Yeah. I think if it's hard, then something's not right. I don't know. Yeah, because it's the easiest. Like you've removed all the barriers, you know, like there's people who have gotten funding without an entity. There's people who have gotten funding in, you know, like countries where they don't even have like good infrastructure and they can't even speak English, or it's not their first language, but you know, they're able to because it's just the internet and you just need to deploy a smart contract. And so, yeah, fuck, I don't know. just my personal opinion.
It's a good take.
Yeah, it's a take.
Well, we'll definitely be we'll keep you updated with how our stuff goes, because we're going to try and do the NFT, then we're going to try and do a token launch. We're going to try and do both of those to raise some capital. I'll probably reach out to you for some ideas and just some kind of like, you know, help. Because I mean, like we're trying to figure this stuff out and grow the community at the same time. I mean, some of the things that we're facing is like, it seems like, at least recently, I don't know if it's correct or not, it seems like every time we post something online that is to do with crypto, it seems like it's being limited. Like I got like 30,000 connections on LinkedIn, right? And I posted a thing the other day from an article Chris wrote, and it got 150 views. Everything else gets thousands of views. And then I think because it's to do something with crypto, like for me, it's limited. But then for like, I think Chris's sister's account, she's more in like the fintech space. And so I think for her stuff, it like blew up really well because of her like kind of following is all in that fintech space. So they kind of can't really limit it. But it's just, to me, it's just kind of weird. Like, you know, we're facing some of those things where maybe platforms have recognized that people are spamming because of like certain crypto projects.
I don't think she tagged like you did as well.
Yeah,
so I think
I mean, I did many things. Like I did hashtags, tagging of people. Typically, like that would blow up the post pretty good. I would have some kind of like traction from it. But I mean, like even a while back, like I think it was like 3 months ago, I did like a post asking just people like, "Hey, are you involved in crypto or not?" And then I got like, I think it was like 5,000-6,000 views from that or something like crazy. Not a whole lot of people voted. It was like about 600 people voted and actually interacted with the post. But like, I mean, that's far better than the 100 views in its entirety, right?
Yeah.
So I don't know. I mean, we're just facing some weird stuff with that, and I don't know if maybe we aren't like marketing it correctly, or if like we're doing something that's wrong, or maybe platforms are like changing. Because we're definitely like trying to figure out how to get through to people. But yeah, I mean, that's kind of where we're trying. The thing.
Have you guys thought of any like word of mouth or like referral type strategies or mechanisms? Maybe.
We tried
like a token reward for like a referral system, or I don't know.
Yeah, I think we did something for invites, but I think like primarily our community didn't really engage with that. I mean, I think we are seeing a little bit of it. I think a lot of people on our Discord are more into like the NFT, because I posted something about, oh, hey, if you do like 10 invites, you get whitelisted for an NFT. So we're trying to do something like that. I think what we should do is probably like focus on engagement with our actual like social posts.
Mm-hmm.
So like go like our like, you know, Twitter post, retweet it, that kind of thing, get tokens or something like that.
Yeah.
For like to increase engagement, at least initially.
Yeah, like meme contests, I know like people have done.
Okay.
Like make a meme and then, you know, like post it to our Twitter, and the ones that people like the most will like get some reward of some kind. I think those are kind of interesting, at least, right?
I like that.
Yeah.
And like, you get to see some like really funny shit sometimes.
Yeah. I mean, that'd be just fun in general.
Yeah.
So yeah, maybe we'll try something like that. Because I mean, yeah, like me and Chris are like, we're technical people. So we're definitely trying to figure out this whole marketing piece and like trying to get that figured out. But we're doing that and also doing like building and trying to do the articles. So like this podcast is a big piece of like trying to produce like quality content, you know, that kind of thing. Chris has been writing Medium articles. That's for like quality content. So we're trying to make like quality stuff, and then hopefully we'll have this like flywheel going, and then that'll eventually take off.
Yeah.
But yeah, man, I don't know. It's so far it's been fun though. I've been having a blast.
Cool. I think that's the most important, right? Like, doesn't matter.
Yeah.
As long as, you feel like it's worth it, and then it's worth it.
Yeah.
Yeah.
Exactly. Yeah, we're having fun. I mean, we're waking up pumped, you know, and platform will come out soon, so we're pumped for that. And yeah. Are you working on any, like, did you find any other cool projects you want to work on?
I've encountered some. I don't know if I like have committed to anything yet. But yeah. I'm experimenting right now. Let's say that. I'm like in an experimenting stage. Yeah.
That's cool, man. That's cool.
That's important to the evolution.
I mean, I definitely think that that's where like things are going to head though, is like people will just like pop between projects. I mean, that'd be kind of like the dream, I feel like.
Yeah. It's like digital nomad, but like digital.
Yeah. Digital nomad, but digital.
Yeah, digital.
Yeah, exactly. I mean, like, because if you can like work on, you know, Compound one day, and then Uniswap the next day, and then somebody else, you know, the third day, and provide value to all of them, but then you're getting to do like what you want to do for that particular project, like that'd be pretty cool.
Yeah, I think so.
Yeah.
Yeah.
Well, I think, Chris, do you have any other questions or anything?
No, I think we covered a lot.
Cool.
We really appreciate your time.
Yeah. Thank you so much, Kevin, for, you know, hopping on. We're still, you know, pretty new. We're figuring this stuff out. I think this is our 4th episode, so it's pretty cool, man. We got one out on Apple Podcasts and Spotify, and we got 2 that are getting edited by our buddy. And this will be, yeah, man. It's going. It's fun though. We're having fun. But where can people find you, Kevin, if they want to like reach out?
Twitter's good. You know. Yeah. Or actually send me an email.
Okay.
Send me an email at kevinxu1@gmail.com. It's probably ideal.
Okay.
Yeah.
Cool, man.
Yeah.
Cool. All right. Well, thank you so much, Kevin. And I'm sure people will reach out to you on email and stuff.
Thank you.
And we'll be in touch.
Okay. Sounds good. Thanks for having me, man. It was good to chat.
Yeah. It's good talking.
All right.
Bye.
Thanks for listening. Find us on social media at Sphere DAO and online at spheredao.finance. Check back weekly for new episodes, and for additional content, check us out on Medium. Until next time, keep hodling.